Hello, traders, and welcome to the Friday wrap-up brought to you through FXCL Excellence in Trading. Traders, it is Friday, June 20th, the year 2014, and it's great to be with you, coming to you live from Pattaya, Thailand. Actually, traders, it is Saturday morning for me, but it's great to be with you. We got a lot to talk about today. We've got our commentary, and we've got about 9 charts to look at. Traders, before we get moving, if you would, please let me introduce myself to you. My name is William Gilday, and I'm your moderator today and every day with our Market Open preview that we bring to you every weekday before the London Open and the Friday wrap-up every Friday after the New York session close. Traders, I was trading in the year 2006, and in the year 2008, I retired from a wonderful career in the fire rescue department out of the great state of Florida. Traders, 9 days after I retired, I came on a 3-month vacation to Thailand, ended up in Pattaya, and it's 2014, and I'm still here. Traders, I absolutely love what I do. I'm doing this on a Saturday morning. Traders, if you can do a job that you like going to every single day, it just makes it so much nicer. As I was very fortunate in my first career for 27 years, I loved getting up in the morning and going to work, and I love going to my charts every day, looking at news, and trying to figure out how we can stay profitable on a daily basis. All right, let's get over to the legal stuff, and this is our risk disclaimer. Forex trading has a large potential of rewards, but also a large potential of risk. You must be aware of the risks and be willing to accept them in order to invest in the Forex market. Do not trade with money you cannot afford to lose. Okay, traders, let's get over to the weekly commentary. I think the first thing we should start with is something that I saw on Newsfeed this morning, and that is that Maserati Cars needs to double its production in order to stay up with the competition. I thought that was really cool to see that. The Dow Jones finished this week on an up note due to, you wouldn't believe it, but oil. That's right, the oil sector absolutely booming through the roof, of course, due to the situation in Iraq. And yeah, that's what's going on. They need oil. Oil is the name of the word this week. Let's go over to the Fed chairwoman. Yellen spoke this week at the FOMC. She's made some interesting comments. Well, not really, but she basically said that interest rates are going to remain almost zero for a long time, and they don't see any time in the near future where they're going to raise interest rates out of the Fed. However, tapering will continue, and they are on target to complete it at their projected ending date. However, the markets took to that, and the dollar became very weak in midweek after that statement. Going over, let's take a look at what's happening in our indices. The Dow closed up 0.15%, Nasdaq closed up 0.20%, and S&P 500 closed up 0.17%. All right, let's go over to the other side of the pond and let's look at the FTSE 100. Closed yesterday at 0.25%. The DAX is down 0.17%. The CAC 40 down 0.48%. Euronext 100 down 0.24%. The Nikkei 225 ended the week down 0.08%. The Shanghai ended the week up 0.15%. And the Hang Seng up 0.11%. So that's what's going on in the markets. And basically, it's pretty funny. The middle of the week, all these pairs ended up making a change in the other direction. But in New York and late in London, it looks like all these pairs are just going to continue their trend and just go back to what they were doing. We had a little, I call it a bump in the road with some of these speeches that came out and things like that. So it's pretty interesting. But I think we're going to just basically stay in the trend, and we're just going to keep looking for trades that follow the higher time frame trend. So on that note, let's head over to the daily charts. And traders, don't forget, this is brought to you through FXCL Excellence in Trading. So let's thank them, one, for having me with you, and of course, to bringing this to you on a daily basis. So let's go to our first chart. And where else to start but with the euro dollar? This is the euro dollar daily chart. And you can see, traders, again, this pair could not break that 200 exponential moving average at 1.3641 and is below the 200. And traders, this is not a bullish pair. We are still bearish in the euro dollar, and I will continue to look for sell trades. Traders, let's go over to our other friend, the pound dollar. What can you say? It is bullish. It has been bullish. It will remain bullish. And all we're looking for in the pound dollar is for this to continue to go up. And our bias is for long trades as we get ready to enter into next week. Look at the price, current price, and look at how far away the 200 exponential moving average is. That is a far distance. So, what's going to happen here, traders, is if this continues to stay bullish, we're going to see this 200 exponential moving average moving up. Look at the bottom of the chart. Look at the MACD. Is that unbelievable? That is really strong to the upside. We're in a trend. And take a look at your Williams R percent indicator. It's above the 0.20 line, and we are just unbelievably bullish in the pound dollar. Let's go over to the next one. Let's talk about the Aussie dollar. This one made a turnaround. We saw a couple of days, well, like 5 days, where this was coming to the downside. However, now we're at resistance, and we talked about this yesterday in the market open preview that the Aussie is bullish again. However, it was coming up to resistance. And look at this. In the last 2 trading days, we ended with a doji. And yesterday's candle ended with that large wick, which is telling me that the bulls are getting a little bit beaten up here, but we're at resistance. So it could sit here for a while and maybe even come back down, give us a fib retrace, and then head back up. However, I remain bullish in the Aussie dollar. All right. One of my favorite pairs to trade is the New Zealand dollar. It's just such a smooth operator. It's just a smooth operation with the New Zealand dollar. New Zealand is doing absolutely fantastic economically. They're just robust. They're raising interest rates. They're just doing everything right. And we, again, are at resistance, as you can see on this chart. The Bollinger Bands are wide open, lots of volatility, lots of trading going on. This is just really great. So we are looking for this to probably tackle this resistance area again into next week. However, we could see a pullback where, Forex doesn't move in a straight line, and we could see that this might come on down below that trend line and then retest it and kick back up above it again. So this is going to be interesting when we go into our trading at the beginning of the week. But again, we remain bullish in the New Zealand dollar, looking for buy trades. All right, let's take a look at our Euro Aussie. Euro Aussie, pretty crazy lately. The last 2 days really has done no price action and has been sideways. And the reason for that was remember, the euro was strong to the upside and the Aussie is strong. So what does that tell you? We have 2 strongs beating each other up, right? So we have strong against strong in this currency pair. So you end up with a flat market. It's basically like putting 2 magnets head to head with each other. They won't touch. So this is what's happening here. And until somebody falls off the rope, we're still going to have a fight. And I would expect that the Aussie's going to stay strong and the euro will fall. But I remain, and I know I'm sticking my neck out on this one, but I remain bearish in the euro Aussie. But we're going to have to see. That's not a solid statement yet. We're going to have to see what happens come Monday and Tuesday in our next trading week. I don't see any trades happening on Monday, probably not till Tuesday, till we can define some concrete definition. All right, let's take a look at our last daily chart for this Friday wrap-up. This is the euro yen. Now, this is pretty interesting, right? The euro was strong for the last 4 days or whatever, 3 days, and look at this. Now it's above the 200 exponential moving average at 138.52, but the daily chart, this is bearish. This is absolutely bearish. This can be probably just a fib, and this bad boy can come back down. However, you really don't want to be taking short trades into that 200 exponential moving average on the daily chart. So what we need to do is we need to take note of the daily chart, that 200 exponential moving average every day, and see where that number is at, because we surely do not want to be trading into that. Traders, it's a pleasure to say this is brought to you from FXCL Excellence in Trading, and thank you to them for letting me be your moderator on a daily basis. However, more important than that, thank you, traders, for being with me every single day. Traders, I hope you enjoy your break, and we will see you next week in the next Asia session. Remember, traders, to trade smart and not hard. Have a great weekend, and we'll talk to you later. Bye-bye.